What's up, everybody? Thanks for joining me on D's Analysis. We're going to be looking at TQQQ, and we're going to be looking to see if leverage ETFs are as bad as everybody makes them seem to be, or if they can actually be a great tool. It's not financial advice. I'm not telling anybody to buy leverage ETFs, but we're just going to take a look at numbers and see if the numbers tell us one story versus what everybody else is telling us. So we're going to just take an example where we have $5,000 and you're able to invest $500 a month. We're putting it into TQQQ, 100%, all in, nothing else. From January 2016 to 2025, $392,000. Start off with $5,000. You went through one dip here. You went through a second dip in COVID, which was like a 30% drop on the S&P 500, probably like a 70-80% drop on TQQQ. I'm going to switch back to the chart really quick to confirm that. We dropped 72% in 2020. It's the end of the world. My portfolio was never going to recover, but you just kept DCAing. And look what happened. 2022, it's the end of the world again. We're going to see what happens. We had a 82% drop. 82% drop. You lost 82% of your money. It's the end of the world. My investing career is over. And you just kept dollar cost averaging, and now you hit 432. And now you're at 392 after this minor dip that we have. So as you can see, leverage ETFs are bad apparently, but people are making money off of them. Not financial advice. I'm not saying it. I'm just looking at the numbers. The numbers are telling one story, right? Let's say you had a little bit more money. Let's say you had $50,000 to invest up front, and then you have a decent paying job and you have low expenses and you're able to invest $2,000 a month. Or we'll say $1,500. You're able to invest $1,500 a month. The same time period, you're sitting on $1.7 million. You hit a peak of 1.7, you dropped all the way down to 372, and you're back to you hit 1.9, and now you're at 1.7 again. But as you can see, it just racks up money. Starting in January 2016, essentially, by the time August 2018 came around, 2 years later, you had $300,000. So you guys let me know what you think. I'm definitely curious to see what everybody else thinks about leverage ETFs. But when you look at this chart, I don't know. The drawdowns are massive, don't get me wrong, but are they just buying opportunities? Because it looks like it keeps going up. I understand leverage decay. Leverage decay essentially is, for instance, let's say you drop 50%, you need 100% gain to make up that 50% drop. So let's see if I can take an example here. We're at 18 bucks. If you drop 50%, and we go from here, we're going to go from there again to get back to $18. You need 100% gain. As you can see, that's leverage decay. But I don't know, it looks like it keeps making its way back. Now, if you do get an extended bear market, then yeah, you could probably get beat down. But if the bear market lasts a year or two, and then you get another 3 or 4 years of it being up, you're probably going to outperform eventually and go beyond wherever that recent top was. Like right now, we still haven't surpassed the 2021 high yet. But I'm sure in the future we probably will, unless we get some kind of recession. But even then, in the future, I'm sure when you get 3 or 4 years back to back, that the triple Qs are going crazy, this thing's going to rally even higher than 2021, as it's done since 2010. So you guys let me know what you think. I'm curious to hear what everybody has to say about leverage ETFs. But I don't know. The numbers don't lie, and it's been making a lot of people money. So I'll see you guys in the next one.